Good afternoon, everyone. My name is Anshul Agarwal. I'm data science manager at Home Partners of America. And today I'm going to talk about machine learning based market strategy that we took during the COVID-19 or during this intense period that uh, created great impact to home partners as well. I've also listed other contributors on the slide. So Rohan, who's the Senior VP of Analytics at Home Partners, and other team members, Will, Joy, Nick Jones, who are with me and who also worked on this framework. So before I talk about this machine learning based framework or like what we did for our market strategy during COVID, let me spend a couple of slides on like what is Home Partners. So what is Home Partners? Home Partners is a private REIT. So REIT stands for Real Estate Investment Trust. So essentially what we do is we raise third-party capital investment from, say, warehouse facilities, institutional investors, securitization deals, joint ventures, and we invest that capital into income generating assets. Now, in this case, the assets are single family homes. So essentially, we are buying single family homes from open market, and the income part is charging rent to the residents in those homes. So we are single family rental and operator in that space. And essentially, we are similar to other REITs you might have heard, such as American Homes for Rent, Invitation Homes. So we operate in a similar way. Now, besides that similarity, we are vastly different from them. And where we are different is the way we acquire these homes. Our entire acquisition pipeline works through our signature program called lease purchase. What is lease purchase? It's an opportunity for residents to rent a home while having the opportunity to buy that home within like next 3 or 5 years. So they have this option and they are actually choosing the house that they want to rent, they want to live in, with the vision that they can potentially purchase that home. So home partners is not just like a landlord or a renter. It's basically uh, deploying socially motivated capital so that residents have this opportunity so they can realize their dream to the path to home ownership. So we are providing a path to home ownership and helping them realize that their dream that they can own a home on any day. Um, so that's a whole idea, like how we operate and what's our platform. Now, let me spend a time on what is this lease purchase program and how it works. So as I mentioned, it's resident led. So in this program, on our website, we have listed all the properties that are available in the open market. And we also list what is a potential rent that our residents will be charged if they apply and get approved in this program. And we also list what's the acquisition price for them, like if they want to buy that home through Home Partners, what will be the applicable purchase price for them. So the way it works is resident, they apply to this program. We work through various brokers in various markets. They get to learn about this program. So they apply for approval, and once they get approved, they can find any home they like on our website. If they qualify for their home from a rent perspective, then they can tell us and they apply for that house. And then Home Partners goes and buys that home. If everything falls in place, if everything looks good with that house, we go and buy that house, and the resident moves in. They live for a year or more, and there are like three possible outcomes. They can renew the lease, they can continue living as a lease purchase resident. They can decide to move out, although we wouldn't like to do that. We don't like them to do that. And the third thing, which is the most promising outcome, is they can buy that home that they're living in, which is the original purpose why they came through this program. So we were this company was established in 2012. I mean, last 8 years, we have grown this program tremendously. As I listed on the last slide, we have helped more than 15,000 families realize their dream. Within like last 2 years, half of our portfolio has come in that much time frame that explains the growth trajectory Home Partners is experiencing. And we are continuing on that trajectory. So I mean, overall, the message is like, so we buy homes and we help residents realize their dream, and we charge rent as the income on those assets. Now we do this on like more than 40 markets across entire US. So we have a vast footprint in this country, and we are operating all those homes in all those markets. Now, going to the topic of this talk, so what happened like early April, late March, when COVID hit, and there was this severe shock and severe impact to the market, the economy, the industry, and the entire country, like how that disrupted Home Partners and like what we did in that case. So particularly, I mean, we all started working from home, and there was like the company-wide impact because of COVID. But from a business perspective, if you see, there were three key major areas where Home Partners was impacted severely. So, as I've listed on this slide, market condition, capital markets, and underwriting. So, market condition has to do with the operations, like COVID-19 hit communities, virus was spreading, and people were going, and there was shelter in place, and states and local communities had lockdowns ordered. So we weren't sure, like, if we can conduct business safely in communities or not. Like, can we go and inspect homes? How will customers come and tour different homes? How can we make sure that our residents, future residents, can safely move into their new homes? Um, there was a lot of uncertainty around that. So that was like one major impact operationally, like how do we conduct our operation in all different markets. The second aspect was capital markets. I mean, the economy was going haywire in pretty much all markets in US. The funding wasn't available freely. The capital availability was it was tight. Markets weren't sure if they can provide funding, like warehouse. We weren't sure if we'll get warehouse facility available to us. We weren't sure if there's a securitization deal that can be done or not. So capital availability was tight, and there was more uncertainty there. And the third aspect was underwriting. And what I mean by underwriting has to do with our residents, our new residents. I talked about economy, and it was having major impact with respect to unemployment, people losing jobs, or people feeling stress financially and not knowing whether they'll be able to like pay rents or they'll be able to cover their costs. And that has direct impact for Home Partners, because we don't know if we'll be able to collect rent from our residents, or if they need any financial assistance from us, or like what will be their situation in like next few months where everything is uncertain. So that was another aspect that was uncertain from our point of view. So to take care of all this, Home Partners decided to close acquisitions in all markets. I mean, for 3 months, we were not acquiring any homes through the lease purchase program for 3 months or more. And operations was also weathering headwinds, which is due to this nosediving economic conditions and unpredictable conditions. And we knew that we had to rely on data and real-time monitoring and machine learning to determine our future course and how we're going to come out of this. So as I mentioned, like that was late March, early April, and by the time early June, when local and state governments they started lifting lockdown conditions, and some of the early COVID impacts started to go down. At that time, that's what I've called post-COVID, which is a post first major impact of COVID. That time, the business started feeling comfortable that yes, we can start to go back to business and start conducting acquisitions again in markets. So we wanted to continue and we wanted to start doing that, but we wanted to follow a structured approach. Particularly, we wanted to see if we can address these four questions, and how we can address these four questions that will determine which markets we open and how we go about opening. Particularly, the questions were how to assess COVID-19's current impact and future course. How do we know what's going to happen in different markets? I mean, the COVID had gone down, but is it going to come back up? And we wanted to have some relative understanding of that. How to predict unemployment and economic impact? How do we know how economy is going to track in various markets? And then with all this, like, how do we rank these markets, and how do we know in what sequence we open these markets? Uh, should we open all of them, or should we like be strategic about opening a fewer markets? And the fourth question was also associated, like, how do we schedule like opening? Should we open batches of markets? How big should those batches be, and what dates we should open them? How do we determine that? So we developed different models that are listed here: scoring model, projection model, ranking models, clustering, that I'm going to go into in the next few slides. So starting with the first question, which is how to assess COVID's impact. So before I jump into the next slide, one thing I want to mention is for COVID impact, our purpose was not to predict how many cases we're going to see or how many deaths we're going to see on a particular day or in a particular month or in a particular city or metro area. Our purpose was to understand these metros relatively, like how COVID is impacting market A versus market B. That was our goal for the COVID part. So, so with that in mind, what we focused on was to understand the long-term and the short-term aspect of COVID-19. So essentially, we looked at two different data sources, the reproductive rate and the cases and deaths per day. And this is pretty much like what people also see, we have seen in other talks during this conference, what governments and people have used to assess the impact of COVID-19. And I've listed these sources. The reproductive rate we were taking from rt.live, which is a website maintained by Instagram founders, and they have created a Bayesian model to predict R naught over time. And then the second source, the IHME COVID dashboard, which is used by local and state and even federal government to quote numbers, as well as like various health facilities. So we wanted to rely on the same source. So the idea was to have data from independent sources and combine them and assess, as I mentioned, long and short-term impact. The short-term impact was for cases and deaths to see what IHME is predicting in terms of when the cases and deaths are going to go down. And like, I don't know if it's visible, I have an indicator on the right side, turn on 0 and 1, which is a solid and dotted line, which was our way to compare buckets of markets and how the cases per day or deaths per day compare between turn on and turn off markets, and whether the turn on market is going to behave better than the turn off market. And on the other side, the reproductive rate, we wanted to understand how these trends have shaped over time. Like, okay, we see the red line, which on the left side is going exponentially or hyperbolically up. But then after that, the states were able to control when they started shelter in place, and then when they ended, the things went back up, and then things went back down. So that gave us an idea, like over, say, 90-day or 120-day period, how this R naught curve will behave, and that periodicity can replicate over time, just because we don't have vaccine, and we can use that as a trend to understand various states and various markets. I believe there is a question on the chat. I have 10 minutes. Okay. All right, I'll quickly go through this. I think I spent. So, so with that information, we use this R0 score, which was basically, as I mentioned, this 90-day behavior. And we multiplied all those R0 numbers to create this R0 score, and use that in conjunction with current cases to determine if, with current cases, states behave how they have behaved in 90 days before, what's going to happen. So that gave us an indicator of how they're practicing social distancing, mobility, the mask behavior, and enforcement. And the low scores gave us an indication that those states could be good to go ahead and open. So that was the first question. The second question was on the unemployment rate, like how do we go and predict that? Now, with unemployment rate, the challenge is that the data is lagged by 2-3 months, which is released by Bureau of Labor Statistics, BLS. So we couldn't rely on that. That was the first challenge. The second challenge was the data that we get, it's for the entire nation, US. How do we get metro-specific or city-specific employment rates? So that was another question we had to get to. And the third question, which was like more important, was like the numbers that we were seeing at that time, they were not reflective of anything we have seen in the past. Like the chart I'm showing here, the red curve is the unemployment rate and blue is the claims per 100,000. And you can see that that huge spike in claims that's not reflective of anything in past 50 years. So how do we use this? How do we trust the any model we build, and how do we know that it's going to behave the way it has worked in the past? So we decided to, but the silver lining is that the claims is a strong indicator of employment rate. So we can use that as an indicator. So we decided to build our own model on unemployment rate as a function of unemployment claims that we are seeing in the recent weeks. And what we did was a derivative of this work by Margaret McConnell in this paper in current issues and economics and finance. So they built a time series model of rate of change of employment as a function of claims. And they had two different forecasting models. But they showed that during recessions, which is what was happening, the second model with claims was working better. And so that gave us a lot of confidence. We used that. We built our proprietary model that I can't share here. But what we also did was, on top of that, we relied on our partners like JP Morgan, Goldman Sachs, and Morgan Stanley to give us industry specific exposure, and use that with the US industry sector distribution to project US specific prediction to metro specific predictions. And that gave us a metro level comparison of like what's going to be the unemployment rate. So these two were the major things. The third thing was like combining everything and creating a score to assess these different markets. So I talked about R0 score and unemployment rate that we use. In addition to that, we use home price appreciation, market purchase activity, and several are internal operations metrics. So we had this multi-dimensional data for all these markets. We did principal component analysis to combine all these into like manageable dimensions. And that picture is representative of like how these dimensions were aligned. You can see the red lines, and you can see three key dimensions that were coming out of one portion of the data that I've shown here. And then with these principal components, we used different methods such as normalized z-score, percentile rank, normalized score product of all these principal components, and created a scoring and ranking mechanism as a weighted combination where we played around with weights. And these charts are basically showing individual components, individual factors, their tornado plots, how they were looking. And when we combined them, we got a final tornado plot that we could use to rank. Okay, I have 5 minutes left. All right. So this was the market scoring and ranking. So with these first three questions, we were able to address ranking all the markets in which we were operating. Now, there's one more question remaining, that was, how do we know how many markets to open and on what dates to open? Like, should we open all markets or like few markets? So for that, we developed a clustering method. And there were two parts to it, like which markets to open and what dates to open. So which markets to open, we used a clustering methodology. So we clustered our markets and using various techniques like k-means, hierarchical. We also explored some of the visualization-based clustering methods such as DSNE or UMAP, and use PCAs to analyze and characterize clusters. Like for example, this plot that I'm showing, as well as like this, the US map, which told us like how clusters are behaving across the nation. Or like, so for example, cluster 2 is orthogonal to cluster 0 and 1. And we had several metrics to look at, okay, on an average, what is the cluster showing in terms of market activity, home price appreciation, unemployment, which cluster is looking good. And that could tell us that, okay, this cluster 0 or cluster 1 is promising and we can open markets in that cluster. So that was one. And the second thing was like, how do we open in these markets? So we relied on the 90th percentile deaths per day. And that prediction was changing every day. So we tracked that and we saw like how that is changing. And based on that, we decided what dates to open. So I rushed through towards the last part of the talk, but essentially like we were able to address all these 4 questions using various machine learning concepts. And we provided a robust platform which we could use multiple times to create a stable stable trajectory towards a future growth and opening our markets. With that, I would close this talk, and thanks everyone for attending and listening. And here's my contact information. So please feel free to contact me if you have more questions about Home Partners or about this work. I'll go to chat. I'll open and see if you have any questions. I'll be happy to answer. The first question I see is, what made you decide to tackle this subject? Um, if I understand this question, is it more around what made us decide to use, like, what kind of algorithm, or what made us decide to go this way? Um, the algorithm was pretty much determined or guided by what kind of question we were answering. So, uh, sorry. So, like, most of this data was unsupervised. We didn't have any supervised information. So we knew that we have to like use unsupervised algorithms, and like this was multidimensional data, and a lot of it was also driven by how we make our business partners understand. And so, like, how do we combine all this multidimensional data into like few dimensions, and we can show, like, through clustering or through plotting, how things make sense. And then intuitively, we also check with our business partners whether it makes sense. So a lot of it was driven by like what question we want to answer, and the algorithm was pretty much a choice of that, except the COVID one where we had to come up with something more creative, like looking at R0 score and the 90-day pattern and assume it's going to behave like that. I hope that answered the question. Well, thanks, Calvin. Another question from Lynchy. Did you learn any skills from the challenge, and how can you apply them moving forward? Um, I mean, one of the things we learned was, uh, so this platform or this kind of framework didn't exist before. And this is one, I mean, one thing we learned was like how we can use this framework as a market monitoring framework going forward. So it's like, I mean, COVID-19 is one thing, but we also looked at several other aspects such as unemployment and other things. And that taught us like, hey, we have been looking at markets only from like internal metrics perspective. We can use this framework to track our markets on an ongoing basis. Um, so that was like a big, like we can use this as a product going forward. So it wasn't a one-time thing. So that was actually one of the major things we gained out of this. I wonder if I can continue if I'm out of time. Any more questions? Thank you so much for your attention and attending my talk. And here's my contact information. Thank you.